All right. So just to start off, I just wanted to shout out your acknowledgement about how crazy the past, I guess, 18 months, a year was. It was a pretty big effort here to get everything finalized. And as Ben noted, there still is this gap where we need to get offsets into the market to help provide a lower cost compliance option. So that's what I'll talk about now. Just briefly, why offsets are so great. And I guess to start off with who I am, my name is Jackie Mercer, and I'm the manager of the Offsets and Emissions Trading section here at the Carbon Markets Bureau at Environment and Climate Change Canada. So our group is in the process of developing the federal offset system, as well as working on the compliance portions of the output-based pricing system regulations. And so in terms of offsets, they're great because they can generate they create a financial incentive for undertaking voluntary activities that reduce or remove greenhouse gases. And as Katie mentioned previously, they allow key actors such as Indigenous communities, farmers, foresters, and other project developers to earn revenue for the emission reductions they achieve, while at the same time help drive transformational change and stimulate innovation and investment. So each offset credit represents 1 ton of CO2 equivalent reduced or removed. And the neat thing about offsets is that unlike some other types of credits, such as allowances, which are permits to pollute in the future, offset credits represent real reductions or removals and require the project developer to demonstrate additionality, which means that the reductions would not have happened without the project, and that they've gone beyond business as usual or legal requirements. But just to note, the offset system does not specify how much each credit is worth. Rather, it's the market dynamics that we've been discussing so far this morning or this afternoon here, which is like supply and demand and all that good stuff, that will influence sort of what price offset credits can be sold at or purchased at. So there are 2 kinds of offset systems. So there's the voluntary offset systems and compliance offset systems. And demand for voluntary offset credits is driven by reasons other than to comply with the regulations. So they're usually used by government or private sector to meet emission reduction targets or by consumers to lower their carbon footprint. And typically these systems have more flexibility than regulatory or compliance offset systems and can take on more cutting edge or riskier project types. And so these types of programs include Vera and Gold Standard, Climate Action Reserve, for example. So then you've got your compliance offset systems, and these are typically established by a government. So in Canada, it's either the federal government or provincial government, and credits can be used by regulated facilities to meet compliance obligations, their compliance obligations. But because these credits can substitute for direct emission reductions on the part of a regulated facility, the eligibility criteria for these projects tends to be more stringent. So we just sort of got the high-level overview of sort of the federal carbon pollution pricing system. So as you know, it has a regulatory charge on fossil fuels and the regulatory system, the OBPS for industrial facilities. And so in the jurisdictions where the federal carbon pollution pricing system applies, companies have their emissions limit, and if they do better than their limit, they will be rewarded through credits they can sell. But if their emissions are above this limit, they will have a compensation obligation that can be met by either paying the excess emission charge, which will start out at $20 a ton in 2019, increasing to $50 in 2022. They can remit surplus credits from industrial facilities that meet their standards, which is what Simon was talking about, the incentive to do better than your current emissions limit. Remitting recognized units, which are eligible provincial offset credits, and then remitting federal offset credits. And so I'll talk quickly about the eligible provincial offset credits. So these are credits that are generated from provincial offset programs and protocols that will be listed on Environment and Climate Change Canada's list of recognized offset programs and protocols for the OBPS. And so the minister will establish the list taking into consideration offset programs and protocols must meet the eligibility criteria that is outlined in the OBPS regulations, which is section 78. Arrangements must be in place for tracking and use of the provincial offset credits with the provincial programs, and that there needs to be additional criteria at the project level. So there's some criteria around project start date, the credits need to be verified by an accredited verification body, etc. And so, as Ben noted, BC, Alberta, and Quebec do all have existing compliance offset systems. And these systems and protocols are currently being assessed against the criteria and arrangements for tracking and use are under development. So use of eligible provincial offset credits does provide a low-cost compliance option, but the eligibility criteria are pretty stringent, as these have to substitute for a reduction at a regulated OBPS facility. And it will actually be a big deal to achieve these one-way linkages to the other markets. But we just need to keep in mind, so that the list will not include all current provincial offset protocols. And we are working really hard to publish the list as soon as we can, but the arrangements are taking some time to finalize because we do need to get it right and ensure that all parties are aware of their roles and responsibilities. And so the anticipated supply of recognized or eligible provincial offset credits is low for at least 2019 compliance year. So hence the development of Canada's offset system. So that's sort of an overview of the linking to the existing provincial systems. And so now for the federal system, it was announced in budget 2019, and a design options paper was released last June. I think we received over 80 submissions from all sorts of stakeholders and suggestions for systems design. And we spent the last few months reviewing the content of the submissions, and that helped inform our drafting instructions. And so the offset system is being developed as a regulation under the Greenhouse Gas Pollution Pricing Act. And we are currently targeting late spring 2020 for publication in Canada Gazette 1 of the draft regulations. So the regulations will build on the recommendations in the Pan-Canadian GHG offset framework for the design of offset systems, and this was agreed by the Canadian Council of Ministers of the Environment back in November 2018 and published just this last October on their website. And the regulations will provide the framework for the operationalization of the system. So it'll include rules around project registration, monitoring, reporting, crediting periods, how the environmental integrity account will work, rules around reversals, etc. So how the framework for how the system will actually run. And the plan is to design the system in such a way as to maintain high environmental integrity, but at the same time be able to efficiently unlock private sector investment. And so the federal GHG offset system will support the creation of offset credits in all provinces and territories, with a focus on offset project development in provinces and territories without existing offset systems. And we are not planning on restricting offset use to just the OBPS, so that's another thing to note. Most importantly, since an offset credit would take the place of direct GHG emission reductions at a covered facility, they must represent real, quantified, verified, and unique GHG reductions that are additional to business as usual. And the design of the system is going to build on the following 4 key principles, so that reductions must occur in Canada, so that reductions are domestic and support actions in Canada to achieve climate change targets under the Paris Agreement. They're complementary to existing climate policy, so promotes GHG reduction projects across sources of emissions not covered by carbon pollution pricing, generating additional economic opportunities in sectors such as agriculture, forestry, and waste. We'd like the system to be administratively simple, so we intend for the system to be as simple and cost-effective to administer as possible, minimize burden and cost for participants, while ensuring a rigorous commitment to environmental integrity, and also build on experience. So the system will build on the experience gained from existing project-based crediting systems and carbon markets in Canada, as well as in other jurisdictions. And as we heard from Paul a little earlier, there's a lot of experience out there for sure to draw from. So the Government of Canada has also developed frameworks for offset programs in the past that will help inform the development of the current system. And so at the same time we're developing the federal offset system regulations, we're starting to think about the quantification protocols. So the protocols will set out the approach for quantifying reductions or removals for a given project type, and only project activities with an approved federal offset protocol will be able to generate credits in the federal offset system. And so the protocol development process is still to be determined. We are working on developing a short list of protocols that we hope to move forward with first. We expect to be able to share that publicly to get feedback to make sure we are on the right track. And while no decisions have been made, we expect to focus on protocols covering project activities that are not covered by carbon pollution pricing. And while it may seem straightforward to develop protocols, I just wanted to flag a few issues that will make offset protocols challenging to develop. And the first one is additionality. And so this is the key element of any offset project. A project in the federal offset system, we're proposing can only be considered additional and therefore able to generate offset credits if the project activities are beyond business as usual or common practice, including any legal or regulatory requirements in the relevant jurisdiction. And so then also incremental to incentives. So what we had proposed in our design options paper were that the reductions achieved from the offset project must go beyond what would have been achieved from other direct financial climate change incentives provided by the government. And keeping in mind all of the other really great work being done within the federal government, we're looking to see how our system can complement those efforts. And finally, leakage. This may occur when the efforts to achieve GHG reductions result in release of GHGs in another location, thereby resulting in no net GHG reductions. And so this is something that will need to be taken into consideration in the development of our protocols. And finally, permanent. So this is in particular for any nature-based or sequestration projects. Protocols will need to specify requirements for monitoring and mitigation and contingency. And so, these are always challenging to implement. So that's sort of an overview of where we are at in the design of our federal offset system and some of the key sort of policy issues that we are sort of continuing to work through as we work on the regulation.
Thank you very much, Jackie. I hope you weren't too pressured by the clock to wrap before noon Pacific time there. We could have dribbled over. You're very important to this discussion. I think that was great. That's, again, a lot of information. One of the key pieces, certainly for the FNCI community, this room, on the phone, who will be listening later, and also as your policies, scenarios, recommendations are being baked, is this is a very live federal policy discussion that's happening right now, and decisions are being made that will impact BC directly and indirectly, right? So now is the time to really become informed and have your constituents, stakeholders, whoever you are and representing, really informed about what's happening in Ottawa and what those possible implications, good or not, could mean, and to really be a part of the process. So, Jackie, thank you. The other thing that, and then before we open it to the floor, is just to be very, very clear and put a fine point on this, right? Surplus credits, OBPS, surplus. Again, it's not something to completely ignore, but it's certainly not particularly relevant to this group in British Columbia. Offsets. Recognized units from existing programs, Jackie. So it's Alberta, British Columbia, Quebec. And you are in the throes of the process now talking to these 3 provinces with existing offset systems. And you have to enter MOUs for the eligible units to then be used for compliance under backstop jurisdictions. So Jackie, just so we're clear about the recognized units from existing provincial systems and that timetable and the list, can you just repeat that very slowly about what we're expecting on that, just so everybody is clear? I just want to make sure it wasn't lost in your great presentation.
No, sorry, and it was a last-minute addition to my my notes. That's why I sort of rushed through it. So as part of the OBPS regulation, we've enabled the use of eligible provincial offset credits or recognized units for compliance. And in the actual OBPS regulations, there are sort of eligibility criteria for both existing provincial offset systems and protocols. And so what will happen is the programs that you noted are being assessed or have been assessed against these criteria, and now protocols are also being assessed against the criteria. And we're just in discussions with the provinces on agreements for tracking and use of the provincial offset credits, because as you know, all of the systems are quite different. When we first thought about this as an option, it seemed pretty straightforward and easy, but it's actually pretty complicated. So everyone's systems are a little bit different, and you'll note in the OBPS regulations the requirement for the credits themselves, once they are sort of on the list, to actually be retired in the jurisdiction of origin. So if they are, for example, BC credits, they would have to follow the process for opening an account in the BC offset system, purchasing credits and then having them retired in the BC registry, and there's a list of information that needs to be provided to the federal government as part of their compliance reporting. So it's all, it's going to be straightforward once we publish some guidance, but we needed to establish these memorandums of understanding with the provincial systems to outline some key, some key information that needs to be provided between the two systems, dates, et cetera, to make sure that if folks want to use those credits for compliance, that there's no problem on either side for allowing that to happen. So the list will hopefully be published as soon as the agreements are finalized and the minister has approved the programs and protocols. And stay tuned, that's all I can say. Hopefully we'll be provided enough time for facilities to be able to make decisions for how they want to comply for the 2019 compliance year.
Thank you so much, Jackie. And whenever the list, when is it going to come? It's coming soon. It's coming soon. This is going to be important. So yeah, I'm really glad that we just took a moment for you to really make it clear around these recognized units in the existing systems and the work that is being done right now, both by the provinces and Jackie's team to make that work. And again, just so we're clear, those priority project types, right, that will be recognized, but also through the protocols that will be adapted by and developed by the federal government, forestry, agriculture, waste, right? So again, in the world of talking nature-based solutions, natural climate solutions, the ag piece, right? Those are the top priorities that you're pursuing, right, Jackie?
Yes.
Yeah.
Basically, we're focusing on activities that are not covered by carbon pricing, that have already have an incentive through pricing.
Well, and it's reflective of just that whole landscape of carbon pricing globally. When you see all of these countries moving ahead with carbon pricing, and a lot of them are, these emissions trading cap and trade systems, they're going after industry, manufacturing, transport, power, right? The pie, the emissions pie of these economies, most of them are covered, right? So what happens is the emissions, right, that are not. Woo! Is it saying your lunchtime? So it's the uncovered sectors, right? Around it's forestry, it's agriculture, and it's waste. And for various reasons, except New Zealand that covers forests, that becomes those parts of the pie that become actual eligible offset opportunities. So where back in the day of Kyoto and even a few years back, where you had a lot of countries and parts of the economy that weren't covered, it became a real ripe opportunity for these offset credits to be generated through look at Alberta, renewables, energy efficiency, there's tons of not forestry ag waste stuff that came out of Alberta's system before, it evolved. But now there's just so many that are or will soon be covering all these other parts of the economy that you start to only look at true eligibility with those additionality criteria to check from forestry, ag, and sometimes waste.
So is that the definition of, I think we heard the phrase, not otherwise incentivized by carbon pricing. Is that what that means?
Covered.
It means that if you were going to be, if you were somehow a carbon price was going to be placed on your emissions, then you're not eligible.
If you're covered by a carbon price, not. Now, where we have where I know there's a bit of contention right now is around, and they have not yet made a clear decision on it, is if a project is given, we call it regulatory additionality, or like public sector monies, funds, go into a project, some believe that should not then be eligible as an offset project type, so then getting a carbon revenue stream. Myself and others within our community would say, well, no, wait a second, there's a lot of really valuable projects out there that will need different types of revenue streams, including the carbon revenue stream from a carbon market, plus public sector money, right? So plus private investment, totally. That blending is it's really critical, yeah.
And I want to make a quick appeal, very simple appeal, and I'll make it again at the end of the day. FNCI is obviously all about trying to figure out how, in this context, carbon markets might enable FNCI to recommend or advocate for policies that would enable it to achieve its vision. And it's not easy to connect the dots. This is complicated stuff. And so those of you that understand the BC situation, and you understand all the other situations out there around the world with respect to carbon markets, can help us to connect the dots. And I know that's what we're doing, and it's starting to happen. But the more clearly we can articulate it, probably that means the better we understand it. So I just sort of appeal to all of you as experts in the field to help us develop that understanding and help the nations develop that understanding so they can start to think about what it is they would actually advocate for in terms of policy development, provincially and federally, that would enable the investment to flow so that achieving net zero LNG and net zero gas products becomes more and more possible because the resources are there and the investment opportunity is there. So thank you so much.
And I might just add one other suggestion.
Sure.
Which would be for those in the room that are very familiar with markets and often use acronyms. For those who are not familiar with it, please do not use the acronyms. Please spell out what you're talking about. Don't be talking about everything in acronym form because not everybody understands the acronyms.
I told them. Acronym jargon to a minimum.
Yeah.
Sorry if we slipped. Yes,
Yeah.
I know.
Yeah, no,
Sorry.
there was a lot of acronym jargon this morning.
This makes us sound smart.
Yeah.
No, it doesn't. We don't want eyes to glaze over. So thank you for the appeal. Noted.
Okay.
Thank you for the curb the jargon and acronyms.
And thank you everybody for those incredible presentations. And I'm going to listen to this tape several times. I can tell you that to try and digest it. And as we get to the end of the day, we really want to see if we can get to some real nuggets. And when we're talking in terms of policy advice, and there will be some next steps beyond today that because everyone's going to want to digest this, and I know FNCI will want to come back and have a further discussion around policy. But I'm kind of jumping ahead.